So we warmly welcome everyone able to attend today's webinar titled The Recovery Journey of Sri Lanka's Tourism. I am Kyle Dharmasena and I will be your host for today's evening. So today marks a special day as it's called World Tourism Day. Another interesting thing which you should know is that yesterday, Sri Lanka crossed over 1 million tourists in 2023. And today's webinar will take a deep dive into First Capital's tourism report, where it will delve into the remarkable resurgence over recent years Sri Lanka has experienced. The nation has witnessed a promising year-over-year rebound in tourist arrivals, igniting fresh hope and enthusiasm within the industry. The resurgence is a testament to the resilience of the tourism sector in the face of unprecedented challenges. Following with the compelling signs of revival from key source markets that have started to regain their momentum after the pandemic-induced lull, and even beyond this, Sri Lanka, with its diverse attractions and unique experiences, continue to shine as a hotspot in the Asian tourism landscape. In light of this, we will discuss the exciting potential of the hotel sector, which seems positive to offer further upside as it adapts to the evolving travel landscape of tourism. To speak further on this, Tharsha Ashoka and Netmi Fernando from First Capital Research, who I will pass the spotlight to, will take over. Tharsha, you may take over.
Thank you, Kyle. Let me share my screen first. Kyle, could you allow me to share my video as well?
Tharsha, give me a minute.
So yeah, okay, sure.
Tharsha, I think you can turn on your camera now.
Oh, thank you, Kyle. So yeah, good evening, everyone, and welcome to our webinar on the exciting topic of navigating tourism's growth revival. So I think tourism has become the talk of the town lately, that almost every week we are hearing about a surge in tourist arrivals. And undoubtedly, the industry is recovering from multiple setbacks, and to be specific, from the 2019 Easter attacks, the challenging times brought by COVID-19 and the subsequent economic crisis. However, what's truly remarkable is how it's bounced back faster than anticipated after these challenging periods. This reminds me of a famous quote of Emily Michel saying, "Every downturn is just a comma, not a period in the economic story." This indicates the idea that economic downturns are temporary pauses and not the end of it. And that's precisely what we are here to explore today, the resurgence and the growth of the tourism industry. So in this presentation, we will be covering the growth in Sri Lankan tourism industry, promising signs of recovery from the source market as Sri Lanka being the affordable destination in Asia, growth in MICE tourism, valuation, and lastly, our key recommendations from the sector. So before going into the Sri Lankan context, let me quickly brief you on the global front. So global tourism has reported a remarkable growth in 2022 with a growth of 115% year on year in inbound tourism due to the surge in pent-up demand for travel. That has resulted the occupancy rate to almost reach near to the pre-pandemic levels. And if we look at the regional wise, recovery in Asia and Pacific region arrivals are halfway to 2019 levels. However, Middle East has fully recovered from the pandemic and surpassed the pre-pandemic level by 15% in the first quarter of 2023. And to be more specific, South Asia has become a star performer with its market share in Asia Pacific region improving from 9% in 2019 to an impressive 28% in 2022. And this shows one of the fastest tourism revivals. Yeah. And overall, if you look ahead, the future of the industry seems promising as travel restriction ease and consumer confidence is steadily improving. If you look at South Asia, in 2019, India and Sri Lanka were the go-to destination for travelers in the region. However, post-pandemic, things have changed. And what's interesting is that Maldives stepped up and showed a remarkable recovery, becoming the only Asian country to surpass its pre-pandemic tourist arrivals. And if we look at the outbound travel spending, despite travel destinations, despite travel restrictions, China still managed to top the list of highest outbound travel expenditure. And when we look at the top 10 countries that spend the most on outbound tourism, 8 of them are also listed as the top source markets for Sri Lanka. So this indicates that Sri Lanka attracts high spending travelers as well. And yes, looking at the impressive growth in Sri Lanka's tourism industry, in the first half of 2023 itself, we saw a steady recovery in tourist arrivals, and it's surpassing our monthly targets as well. And just yesterday, we achieved a significant milestone where we welcomed 1 million tourists within a year. So this is a remarkable feat, and it's the first time in 3 years, mainly since 2019, that Sri Lanka has reached this milestone. So this recovery was mainly supported by increased air connectivity, lifting of travel restrictions issued by many source markets and favorable weather conditions. So in order to further add on that, so the significant depreciation of the currency and multiple tourism promotion campaigns, for example, in India, Europe, and also the road shows in China played a critical role in positioning Sri Lanka as an attractive destination for travel. So considering the accelerated pace of this remarkable recovery, we made an upward revision to our year-end target for 2023. So which is aiming for 1.5 million arrivals with a year-on-year growth of over 100%. And in fact, by 2025, we expect to surpass the pre-pandemic levels with a total of 2.5 million arrivals. And also, if we look at the occupancy, it's usually October to March tends to be the peak season for us. So with the higher influx of arrivals, hotels reach their highest occupancy levels during the time. So for instance, if you look at the last year, more than 65% of the arrivals were recorded during the winter season. So as now we are approaching the upcoming winter season, starting from October, we are already seeing a positive trend with early bookings and mainly with no cancellations. So with that, the fourth quarter of this year, we may see significant spike in occupancy and tourist arrivals. And in terms of earnings, up to July 23, we've already reached USD 1 billion in earnings, and that indicates an impressive 43% year-on-year growth compared to the last year same period. And if we look at the average spending per tourist in 2022, Sri Lanka is well below the regional peers such as the Maldives and Singapore. However, it's well above both the global average and the spending levels in many top Asian destinations, which includes Thailand and Indonesia. So this indicates that Sri Lanka holds for a wide range of travelers with varying budgets from backpackers to premium end. So, as I mentioned earlier, so we may see a significant pickup in arrivals mainly in November and December, and it was to be largely led by India, Russia, and European travelers. And also, China has been a significant contributor to our tourism industry in the past, and which accounted for 11.4% of the total tourists to Sri Lanka back in 2018. So with China reopening its outbound tourism earlier this year, we are observing a gradual but encouraging increase in visitors from China once again. So currently, India stands as the largest source market for Sri Lanka with over 150,000 arrivals recorded year to date. And we expect this number to continue to rise due to multiple factors such as proximity, affordability, and the growing middle income population in India. And when we look at China, it's important to recognize its global significance in terms of outbound tourism because China is the leading country which is globally in terms of outbound tourism, contributing to over 20% of the world's outbound tourism expenditure in 2022. Also, the average spending by Chinese tourists has notably increased from 2019 to 2022. So this shows the potential and importance of this Chinese market for Sri Lanka tourism, especially with the rising affluence of Chinese travelers. Yeah. Speaking of the affordability, although local prices have increased significantly, the costs associated with the accommodation and travel have dropped by more than 25% in terms of USD, and was mainly due to the depreciation of the LKR. So this decrease is a positive signal for tourists, making Sri Lanka a more budget-friendly destination for them. So to further illustrate that, if we compare 2018 average room rate, which was around USD 130, now in 2022, it has come down by 40%, indicating the average room rate remaining relatively cheaper compared to the pre-pandemic levels due to LKR depreciation. Yeah, so our star hotel room rates are currently lower than our peers, but with the reintroduction of the minimum room rate starting from $50 from October 1st, we will be mostly on par with our peers. And if we look at the flight fare, if we compare last year and this year from India and UK to Sri Lanka, flight fares have come down, and it was mainly due to increased flight connectivity and appreciation of healthcare. And to further add on that, so however, with the fear of global recession, we may see impact on high cost of airline tickets. So, however, our airline is almost 2 to 3 times expensive than the pre-pandemic level due to LKR depreciation. But as flight connectivity continues to grow, we expect flight prices to remain stable. So that makes Sri Lanka more appealing. Yeah, so there's a study of detailed cost comparison on living expenses among our peer countries, which was carried out by Flamingo app, and Netmi will take up from here. Over to you, Netmi.
Thank you, Thalja. So, next, bringing your attention of the digital nomads and digital nomads visa. It has been the talk of the town because the demand for digital nomad visas have been shooting up. So, a digital nomad visa is a temporary residence permit that allows remote workers and freelancers to live and work in a foreign country for an extended period while conducting their work online. So, after a study that was hosted by Flamingo, they have ranked Sri Lanka as the #1 destination for digital nomads to work online, mainly because of the cheap living cost. In other words, Sri Lanka stands as one of the countries that give the best value for your hard-earned money. So, if you take into consideration Sri Lanka and Argentina, the first two ranks, an individual who will actually choose Sri Lanka over Argentina, the second rank, will save 14% from their disposable income compared to working in Argentina. That's also a huge advantage to the individual and also to our country. So with the digital nomads entering the country, we can expect more active tourist arrivals into the country, and also when digital nomads come and set up their online workspaces in the country, they will also contribute to local businesses like cafes and hotels, and also to the transportation industry, food and services industry, creating job opportunities that will subsequently expand the tourism industry in the country and also contribute to the GDP. So, moving on. Sri Lanka has been rising as a premium MICE destination. So SLTDA has a target of 1.5 million tourists to come into the country to end 2023. So out of this 1.5 million, 12% of them are expected to be MICE tourists. And they are also expected to come from South Asia, Middle East, and Europe. So if we take into consideration of the MICE arrivals for the past few months, it has been actually consistent with the pre-pandemic levels, as August 2023 recorded 5% of MICE travelers from the total tourist arrivals in that month. This is mainly because Sri Lanka now has been identified as the potential marketplace. So this majority of MICE travelers that are coming to the country are Indians, mainly because of the Indian expansion of economy as faster than they expected. For an example, India actually organized multiple conferences powered by Tata and V Institute of India, which in the first quarter of 2023 attracted over 500 travelers to the country. So with projects in the country like Cinnamon Life and Port City, we are expected to open more doors to MICE travelers, which the officials anticipate that will bring $3 billion to the country, because MICE travelers are expected to pay three times more than leisure travelers. Moving on, talking about Maldives. So Maldives is one of the world's fastest recovering countries in terms of tourist arrivals, and this is the most popular destination in the world as well as in Asia. So if you look towards the top left graph, you can see the 2022 arrival figure. It's almost 1.7 million. Mirroring the 1.7 million in 2019, which has almost touched the pre-pandemic levels. And also 2023 year-to-date figures are almost around 1.3 million that they expect a further surge in the future. So this is mainly coming because of the popular beaches and villas in Maldives, and also because the Maldivian government has given the right amount of publicity and exposure at the right time, undergoing innovative approaches. So if you now check the revenue breakdown of Ahun and KHL, so Aitken Spence Hotels and John Fields Hotels has been two of the major hotels in the country which has this Maldivian exposure. So if you take into consideration of these hotels and their financial statements, the operational segmentation will show you that the Maldivian segment has been immensely contributing favorably to their top line, the bottom line, and even occupancies. So because of this bullish sentiment in the Maldivian section, these two hotels are expected and we anticipate that they will perform great in the future. And also on the other hand, as First Capital Research expects the LKR appreciation against the greenback to be limited, mainly because of the import restrictions being taken off. Hotels like Ahun, KHL, and Con that has this Maldivian and overseas exposure will may experience favorable measures in the future. Moving on, owning an in-house travel agency. So as you can see on the screen, Aitken Spencer, Haley's Leisure, and John Keel's hotels are three of the major hotels in the country that own their own in-house travel agency. So the main advantage of owning an in-house travel agency gives the customers the hassle-free experience, because from the budgets, the planning, the packages, the arrival, the departure, the transportation, everything in the process has been planned out already by the hotel. And it will also help with brand consistency, that will help attract more visitors and increase occupancy while boosting profitability. So on a most important note, UK and Chinese travelers who may come in the winter season ahead will immensely take advantage of this opportunity of an in-house travel agent. Also next, with the resurgence in the tourism sector, investor confidence has also been upscaling. So in 2022, out of 3,829 registered accommodations, only 156 were classified as tourist hotels. But with the resurgence of the bullish sentiment of the tourism industry, the ratio of graded to supplementary rooms shifted from 35% graded to 65% supplementary rooms in 2019, to 31% graded to 69% supplementary rooms in 2022. So because of the economic crisis and the pandemic affecting the construction sector badly, investments in the sector declined by 48.8%. But now, presently, the economy is more into a recovering path. And also because of the bullish sentiment on the tourism sector, presently there are 95 projects with 5,424 rooms that are being in the process of construction, and they expect to complete 1,623 rooms at the end of 2023. So taking you all to the case study section, we planned our research on countries like Greece and Jamaica this time around, mainly because those countries also have faced economic crises like us, and they also have gone into IMF bailouts. But what's important is that the tourism sector in those countries have been consistently contributing favorably to their countries. So going to Greece. So looking at Greece, the Greek economic crisis stemmed during early 2000s after adapting euro as its currency. So this allowed the country to borrow at lower interest rates, which the government started overspending amidst weak tax collection systems. So because of this, the country went into a liquidity crisis. And after the liquidity crisis, they also went for IMF bailouts under standby arrangements and extended fund facility arrangements. So looking at the tourist arrivals and the tourism contribution to GDP, the chart to your left, you can see if you omit the 2020 pandemic year, you can see the occupancy levels and the tourism sector actually contributing positively, consistently actually to the country. And it has made Greece one of the top European tourist destinations, which directly and indirectly contributes to nearly 20% of the country's GDP. So moving on to Jamaica, Jamaica also went through multiple crises because of the government policy missteps, high debt burden, which reached 147% of GDP in 2013. Also because of the fiscal imbalances and exchange rate instability. So Through these crises, yet Jamaican tourist arrivals and the sector contribution to GDP has also been consistent. If you omit the 2020 pandemic year, you can see it has always been on an upward trend. So Jamaica is very popular for their unique culture and beaches and people. And tourism directly employs 175,000 Jamaicans and generate indirect employment for another 354,000 Jamaicans. Overall, the tourism sector has grown by 36% over the past 30 years. So that's about it from my side, and I want to open the floor for Tarusha to take you all through the valuation section. Thank you.
So yeah, thank you, Netmi. So yeah, moving on to the valuation. So yeah, before looking into the valuation of the listed company, so if we look at the stock price performance over the past year, so more than 65% of the hotel sector counters have shown year-on-year appreciation. So that's reflecting the positive impact of increased tourist arrivals on their financial performance. So mainly in June quarter, many companies have recorded reduced losses and some turned profitable as well. So however, rise in operating and finance costs affected few companies, but with the interest rates coming down, mainly with where AWPLR is now around 14% compared to the last year, where it was around 25%, we may see these hotels to report positive growth in earnings. Further, top line is also to be supported by increase in occupancies and average room rate in the coming quarters. So moving on to the valuation. So consumer services accounted for 5% of the total market capitalization. So out of which John Keel's Hotels, Asian Hotels and Properties, and Ahun hold the largest market capitalization. So, however, the sector remained highly geared and impacted from the high interest rates. And however, the extended moratorium provided some comfort and potential for the recovery. So initially, a debt moratorium was granted in mid-2020 for 6 months and later extended until June 2022. So however, with the country's economic crisis and record high inflation, added significant cost pressure on the working capital, especially with the high interest rates. So to fund working capital requirement and the refurbishments, multiple companies which are highly geared went through rights issues to inject the capital. So recently, Palm Gardens Hotels and Eden Hotels Sri Lanka recently completed their rights issue with the ex-rights trade occurring yesterday. And if we look at the price to book value, nearly 70% of the hotels are trading well below the industry price to book value, which is 1.3 times. So that indicates most of the shares are trading at a discount to its book value. And in terms of annual revenue per room, city hotels such as Ceylon Hotels Corporations, Kingsbury, and France Asia achieved top due to their higher average room rates. However, companies with great exposure to Maldives and Middle East countries like Aitken Spence Hotel and John Keel's Hotel also report impressive revenue per room figures. And to further add on that, Aitken Spence Hotel and John Keel's Hotels and Asian Hotels and Properties has the largest number of rooms, which has the potential to upgrade their performance as well. And yes, so finally moving on to the most awaited part for most of the investors, which is the stock recommendation. So we have classified the hotels into few segments, such as hotels that are exposed to Maldives and other countries, coastal hotels, city hotels, and boutique hotels. So under overseas exposure for companies positioned to benefit ahead of the upcoming winter season, we recommend Aitken Spence Hotel and John Keel's Hotels and Haley's Leisure, as Maldives is re-owned for winter holidays. And also under coastal side, so coastal hotels such as Royal Palms Beach, Serendip Hotels, and Dolphin Hotels are likely to attract tourists due to the appeal for coastal areas. And among city hotels, we recommend Asian Hotels and Properties, which is HPL, considering the rising occupancy rates, even during the off-season. And lastly, boutique hotels that are expected to fill up occupancy rate faster than the city hotels, and especially given the limited number of luxury rooms, under which we have a Lighthouse Hotel and the Fortress Resorts in this category. And so to conclude the presentation, so I would like to remind that tourism has undeniably taken center stage as one of the fastest industry to show evident recovery post-economic crisis. And it also exceeding our expectation. Sri Lanka tourism industry is now heading in the same direction as the global tourism trends. So which is poised for ongoing growth. So that's the end of the presentation. And now we are opening the floor for Q&A session. So please drop your questions and we'll make sure to answer as much as possible. Over to you, Kai.
Thank you, Tharsha. So, like Tharsha said, we are opening the floor for a Q&A. And to join us for the Q&A, we have Tharsha and Netmi on board, along with Mr. Dimantha Matthew, who is our Research and Strategy Officer at First Capital Holdings, followed by Ranjan Ranatunga, who is the Manager in Research at First Capital Holdings. So we'll give you 5 minutes to type your questions in the Q&A section box. And from there on, we will answer some questions. Thank you.
Okay, hi. I think we have a couple of questions that have come in. Yeah. So the first is, what is the potential of con with the current exposure on occupancy and bookings? So I would like to get Tarusha or Nithni to answer that question regarding the potential of the con share.
So I'll take up the question. So Con has last year has reported an occupancy of 60%, and it is a significant growth compared to the compared to it was significantly affected during the COVID time. So pre-pandemic, their occupancy was around 70%, and it was almost reached to the pre-pandemic level. And towards going forward, we expect FY24 to reach their pre-pandemic, which is the 70% occupancy, and going forward, it will improve further. And also with their exposure in Maldives, as Netmi explained, Maldives has been one of the, it's the only country to surpass their pre-pandemic level in terms of their arrivals, and they are actually doing well in terms of their tourism. So with that, along with Con, we expect Ahun and KHL to benefit from their exposure to the overseas country. Yeah.
Okay, great. Thanks, Tarusha. So there is another question regarding uh, do you think city hotels are more attractive given the high number of Indian tourists arriving? So uh, basically, if you look at it, I think uh, there's a huge potential in the city hotels now because the number of tourists are significantly increasing. So earlier, what happened was the tourists were directly going into the resort hotels, and as the number of tourists increased, we are gradually seeing the higher spenders slowly coming in, and with it, we are seeing a significant increase in the occupancy levels of the city hotels. Correct me if I'm wrong, Tarusha. Uh, the main, if you take AHPL, we are seeing occupancy levels in the range of 75 to 80% in both the hotels. So there seems to be in the November December season. So basically, we are seeing a significant increase, and Indian tourists are contributing in a big way for this as well. So because most for in terms of Colombo shopping, uh, this Indian tourist segment is a big key to for the Colombo shopping segment. That's what we've seen.
And also to further add on that, so city hotels are most also targeting the MICE arrivals, and we can see many Indians are coming to Sri Lanka for MICE business events, like conferences and those kind of things. So, and given that Colombo has the number of star hotels, yes, Indian tourists are mainly the MICE tourists are coming for city hotels. Yeah.
It looks like we have another question. Will the exchange rate have a positive effect on hotel revenue? Can our panelists
Yeah,
answer?
yeah, I'll take that up, Kyle. Of course, it's going to have a positive effect because if you take our exchange rate expectation, we're looking at with the economy reopening, possibly there is a potential for the currency to depreciate because Sri Lanka is a more import-led economy. We are basically a net importer. So with that, over the last 30 years, we've seen a 5% depreciation in the currency, and that is what we are likely to see now. If you take the first capital's expectations, we're looking at the currency to be around in between 320 to 360 up to forecast of next end of June next year. In that range, we believe it will be more or less around the 330 range towards the end of the year and moving towards the 360 range towards next June. So what happens with that is obviously the hotel sector, the revenue comes in dollar terms, and of course the cost side mostly is rupee denominated. So because of that, there is a margin expansion as well. Also, we are quite cheap at the moment overall. So that there is a overall benefit that is coming in terms of demand as well at the moment. And we believe we've factored that in. We're expecting ARR to further increase even most in the resort hotels. Now we have a minimum room rate in the city hotels that is getting applied from the first of October. So in the resort hotels, with the demand significantly increasing, we believe that by FY25 we will see higher ARR or average room rates coming in.
All right, that seems like a good answer. But there's another aspect to looking at this. Now that we're looking at the revenue, the other side is what is the expected impact of the budget to hotels? That's another question here.
Okay. Yeah, so if you look at, so we don't expect anything big coming out of the budget for the hotels. So in terms of taxation, also in terms of corporate taxation, we don't think that there's going to be any increase or that is new to the corporate segment, especially impacting tourism. However, something positive that I can say is the relaxation of trade restrictions, which will help some of the important consumer items to come into the country, so that uh, the hotels have the capability to entertain the tourists, because due to certain restrictions that are there in the country, there seems to be a bit of a inability to uh, service them in full gear. So if we have this restrictions lifted as promised on the 1st of October, we will have to, in the last quarter, the ability to bring in the required consumer food items or other consumer items that are required for hotels, that will enable them to up their service levels.
All right, thank you, Mantha, for that answer. Another answer was on the stock Ahun. Will Ahun even make money given its high debt levels? Can someone from the panel give an answer for this?
So I think Tarusha or Nitmi should answer this regarding depending on who covered the hotel. Yeah.
Right. So, Tarusha and Nitmi, the question is, will Ahun even make money given its high debt levels?
So Ahun is actually one of the leading company which has the largest number of rooms. So if you look at the last year financials, their profitability, which they made losses, actually it was mainly affected by the interest expenses and the high operating costs. So given the fact that our interest rates are significantly coming down compared to the last year, we may see a gradual improvement in their growth in their profitability, which will so with the interest rates coming down, we may definitely see the finance expenses to fall as well. And also in terms of the operating costs, so as the inflation easing down, and also hotels, they almost have a like fixed cost. We don't see a like significant increase in their operating costs going forward. So that will definitely bring in a profitability to the company for Aho.
Great. And also, I will just add a bit on that from the report that we've sent out. Basically, the forecast go as we're looking at about a 1.7 billion profitability coming this year. Obviously, the peak season for December and March helping in a huge way for the company. And then we're looking at 2.4 billion earnings increase into 2.4 billion in FY25, and a large portion basically of that is the recovery in the Sri Lankan hotels. So that is something significant to watch out for.
Right. Thank you, Tharsha and Dimanta. The next question is pretty lengthy. Let me read it out. You underscored that occupancy levels have substantially grown, but with the minimum room rate factoring into the industry, where do you see occupancy under MRR instead of ARR? Following the question, it says, also, most five-star city hotels are taking forward bookings for the season at prevailing ARR. With the implementation of MRR, do you foresee an impact? And if so, what extent on the top line?
Uh, Definitely. So there is a issue there with the minimum room rates coming in. So minimum room rates obviously were lower, or the room rates were, or ARR was lower in most of the city hotels. And with this coming in, what happens is it makes the whole tour for the uh, tourist much more expensive now in a period we are trying to recover, and where we are competing against global tourism. Having We've had a major advantage in terms of cost plus airline cost plus room rate. So this reduces that advantage, but does not completely eliminate the fact. Uh, so because of that, we think we will still there might not be a, major impact at the moment because we are experiencing significant demand that is coming in, especially in terms of forward bookings. So I don't think we are likely to experience a major problem at the moment.
Well, to follow on to this, with the upcoming winter season, will the MRR have an impact, or the standard rate prevalent at this level will be maintained? So will the standard rate will be maintained at this level also with the upcoming winter season? Could our dear panel answer this, if so?
Yeah. So more within the MRR will stand. What is the question again? They are asking whether it will be maintained, right?
Yeah, so with the upcoming winter season, will the MRR have an impact, or will the standard rate at this level be maintained?
No, no. So the MRR will apply. So as at now, it is to be implemented from the 1st of October and is gazetted. So it will apply from the 1st of October, and it will be the rate that applies for all the hotels. So the different star class hotels have the different rates, and that will apply, and the existing rates which are lower will have to be up to that rate.
Right. Okay. Thank you, Dimanta, for that answer. To jump into another good question here, it is saying, what are the future plans to improve the tourism sector. So the question is asking on an add-on to achieve 1.5 million tourists this year end. What are the future plans that can improve the tourism sector in these areas? Exactly.
So I would like to answer for this question. So as of yesterday, we have reached nearly 1 million tourist arrivals, and so with and we can see so this Ahon main the leading hotels have already have the bookings for their winter season ahead of the time. So for the October, November, December, the occupancy we can oh, expect it to be around like more than 85%. So, and it's also with a 0% cancellations. So that will significantly boost the arrivals in November and December specifically. So that will bring up to 1.5 million. So we have a 500,000 left for to end the year. So with the October, November, December seasons, we may achieve the forecast.
Right. Thank you, Tarisha, for the answer. The another question, so related somewhere else, is there any impact on debt restructuring and IMF involvement to the Sri Lankan economy? Is this going to affect the tourism sector itself?
Um, so for what from what we've seen, we don't see a huge impact coming from the debt restructuring angle. As soon as the currency was floated and things stabilized last year, uh, basically from that point onwards, we've seen a uphill in the tourist arrivals. And so debt restructuring is something that we've embarked on over the last uh, 4 to 6 months. Yes, it'll add on to the confidence levels, but doesn't seem to be having any impact on overall. I don't think it has an impact on tourism or tourist arrivals per se, because now we've completed on the DDO side, domestic debt restructuring side, but not yet completed on the external debt. But we are seeing a major push in the tourist arrivals and the booking levels. So there doesn't seem to be that sort of a relationship. But also IMF involvement, nothing too big affecting tourism. However, something important to note that as long as the common services are up and running, I think that is the major concern for tourists, uh, whether you can transport yourselves to different areas. So that sort of thing is something that's important. Also on the IMF front, what we are seeing always is positive progression. So that will only add to the confidence levels. If you take even in the stock market, the consumer services segment, which we are pushing at the moment, will have further impact and further positivity coming out of it. Uh, what we have seen currently is that there's a slight delay in the second or the first review that is taking place for the second tranche of the IMF. So there is a delay because we've not yet completed the external debt restructuring. But give it a couple of months. By November, there's a high probability that we will manage to complete it, and with that, we will have uh, that segment sorted out.
Right. Thank you, Dimanta, for that answer. We have one more question here. With Maldives occupancy and booking levels going up with the upcoming winter season, what is the expected positive impact on the KHL?
Yeah, so KHL has nearly 450 rooms in Maldives. So if we look at their occupancy in Maldives, it's almost around 90%. So it was deeply affected during the pandemic time, so where it went down to around 30%, and pre-pandemic it was around 90%. So we can see the occupancy have significantly improved to their pre-pandemic level. And in terms of their revenue breakdown, nearly over 75% of their revenue is mainly coming from Maldives. So given the increase in bookings, so we may see the Maldives is largely supporting the business, given the significant improvement in their tourist arrivals. So yeah, so KHL is definitely benefiting from the increasing demand for Maldives, and also with the upcoming winter season, we may see an increase in their occupancies as well.
Right. Thank you, Tarusha, for that answer. So we are closing the Q&A session. We want to thank everyone for joining today's session, especially those who have taken the time to be here for the webinar. Especially currently, the tourism sector is growing at a rapid pace, and we foresee positive signs to invest in it. I hope you guys have a great evening. The panel have any last comments to say before heading out?
Yeah, so one final comment. I think there's a great opportunity. We've been covering this sector for over a year now. Our main detailed sector report came up last September, and we've been putting out reports every 6 months, and it's has continuously been on an uptrend, and we feel that we're very confident in this segment, and we've always seen the counters perform ahead of their time. So that's something important to note, something important for all investors to look at is the 2009 to 2011 run that we've seen in the hotel sector, and we've seen the sector moving ahead of its time before the earnings come in. So it will be a great time to get into the stocks, and there's a lot of upside. So overall sector, we are expecting at least 25-30% upside overall. So which will give you a great benefit if you can enter at an even now. It's not too late, I would say.
Thank you, Mantha, for the comment. The panelists, if there's anything else you guys want to add on. All right. I think we will call the webinar to a closing. We will be sharing the presentation through either WhatsApp or email. If you have any further inquiries, do reach out to us in due time. All right. Thank you guys for joining the webinar. Hope you have a great evening and a great weekend ahead. Thank you.